You're watching Notepad. I'm your host Ibrahim Sani. We take a quick look into the banking industry because Standard Chartered has recently released their findings of their mid-sized corporate pulse survey. This survey takes a look at the impact of the global pandemic situation, particularly across the SME sector, across various markets, including that of Malaysia, as well as mainland China, Hong Kong, India, and Singapore. And in the survey, it found that 50% of respondents indicated a 20% to 50% reduction in monthly revenues, while close to two-thirds, or 62%, believe that it will take at least 6 to 12 months to recover from the impact of COVID. So we all understand that it's going to be dire. Just how dire will it be? Joining me is Abrar A Anwar, the Managing Director as well as the CEO of Standard Chartered Bank Malaysia, here to discuss all the findings and perhaps some of the contingency measures that SMEs can actually undertake to weather this very terrible storm, which is still ongoing, by the way. Encik Abrar, thank you very much for joining us today. Let's do a quick high-level summary of the findings from this survey.
Thank you very much, Ibrahim, and to Astro AWANI for inviting me here. And it's really interesting to really share what we have found in the survey as we are going through the pandemic across the globe. So, as you know, Standard Chartered, we are present in the markets like in ASEAN and South Asia for more than centuries. Like in Malaysia, we have been here 145 years. So we are like a significantly rooted foreign bank. We were the first bank over here. So in this market and across the region, we operate in all the segments, like a universal bank, starting from retail to SME, middle market, and the large corporations. So that's why we instituted this survey across Malaysia, Singapore, China, India, and Hong Kong. And our findings are quite revealing. We looked at and we actually asked them, what are the priorities that you see as you are facing this pandemic, and which started as a health problem became a macroeconomic issue. So really cutting across all the segments.
Across all the countries in the world.
Across all the countries, all the segments, the global GDP is coming down and its impact is colossal. Let's put it this way. So when we ask them, what are your priorities that you see to sort of navigate through this period, or the learnings from here? If I give the Malaysia context for the relevance of our audience, 73% of the respondents say that they will become more risk conscious going forward, because this event, like a black swan event, never seen before, and some of the risks that are coming onto the businesses or the economy or even at individuals' life were never seen before or anticipated. So I think that they will be more risk conscious going forward. That 73% of the respondents said. Then 69% of the respondents said that they will become more agile or flexible in their operations. What does agile mean? Being able to swing to different type of operations in a faster way. Like they may not be having major capital investments in real estate, for example, or machinery, or they may have different sort of engagements going forward. 63% said that probably they will become more digital. Digitization would be a major focus for them to remain resilient going forward. So I think these are the key, and then of course there were some more.
Well, I find that interesting because wouldn't the ability to use technology or the need for them to be more technology able or digitally able be right up there? I'm thinking 80-90%. Why is it 65%, the way I have it here? Why is it still, I don't know, it's a lot, but not the way I would imagine it to be.
Yeah, I mean, if you look at before the world hit into the pandemic, digitalization probably would have been at the top. The other two, agility and also the risk consciousness, probably did not hit their minds. So now finding themselves in that type of a situation, this is like at the top of the mind. So the enabling forward, enabling themselves to be resilient, digitalization would be a key determinant.
Of course, the survey is quite extensive,
Yeah.
and if we drill down each and every single findings, it's going to be very revealing.
Yeah.
But I want to jump into this straight into how you think Malaysian corporates can actually future-proof themselves when it comes to this pandemic, knowing that these are the findings that you have in your survey.
Yeah, of course, that's a big question, how to future-proof yourselves when you know the future. So,
Which is bleak.
which is like, before this COVID-19 hit the world, never ever anybody thought that so many, for example, so many aircraft would be parked in the airports. They were supposed to be all flying, right? So, some of the new things that happened was never could be imagined. So, future proofing, getting ready for something even, we don't know, maybe something even more colossal for future, in future, somebody need to ensure that they can navigate in a situation that they're able to overcome. Say if I take our situation as a bank, just give you an example of how we navigated. When the movement control order came in, we were asked to put as many people as possible working from home. As a CEO, I was initially a bit perplexed that how do I run the bank with 76% people working from home. We did have business continuity plan, we did have fire drills and all the things that we do, but it was never tested.
It's all textbook.
Yeah, it was all tested. So it was never tested in the real life. But thankfully, all the investment that we have been making in technology, we had 93% laptop penetration. So within one day, we could switch on to and working from home mode without missing a beat. We had all transactions, all engagements with the clients done through digitally. In fact, our people could do everything sitting at home. We had to enhance our VPN capacity overnight. So those were the things that we did. So now, if you ask me how we are thinking of future proofing ourselves, we are still looking at it. What will be the proportion of working from home? How much of real estate do we need? How do we remain agile, reduce our operating costs so that if something happens, your revenue is impacted or economy is impacted, how do you manage to remain nimble? So I think transporting that to the corporates, they will have to think like that, how to remain nimble and not have too much of overheads, maybe at variable cost level, so that if they have to reduce their activity, they're able to cover up. They're not too much in the
That is a very, you see, this is a very hard conversation we're entering right now, because the corporates understand that reducing headcount, reducing overhead is important, but at the same time you're impacting the livelihood of many. And this is where unemployment rates are actually increasing month on month. Very recently, I think the Department of Stats have given June numbers. July numbers are coming in just a few weeks' time. It's going to be dire. Having said that, Malaysian numbers in terms of unemployment and underemployment is still a little bit better than compared to our peers, but that number is going to creep up. How do you think, as a bank, you can actually advise corporates to actually manage this situation a little bit more prudently and delicately moving forward?
First of all, I think the immediate response is to ensure that A, they can protect the cash. Cash is king. So that is like if the activity is like some corporates would have business opportunity. We have seen a lot of our customers, be it middle market or large corporates, they had spiraling of opportunities in the sectors, the hygiene or in the gloves and all those areas. Maybe even the hand sanitizers, just skyrocketed.
Yeah.
But of course, Malaysia being an open economy and with the borders being closed, the various sectors like tourism, even the hospitality, all those aviation, all those got impacted, and it has got a multiplier effect on these sectors. So, I mean, first of all, they have to ensure that they have access to capital, able to come out through this period, whatever cash burn they will have, they have enough to sustain, and also ensure that some of the non-core expenses they can eliminate and prepare for a resilient operation.
See, access to capital is important, and of course, the government, for instance, have given plenty of incentives and also introducing bank moratoriums, which in a way affected your business, but at the same time helped alleviate some of the credit concerns that these corporates have, as well as individuals. Do you think that, when you say access to credit, on one hand, you guys want to give more credit. On the other hand, you guys are very much concerned about risk. That balance that you guys are trying to give to the companies and your clients out there, how do you manage that balance? A very delicate balance.
That's a very good question. First of all, I would say that government of Malaysia and Bank Negara acted very fast in coming up with the various packages required to support through this period. In fact, as we discussed with our regional counterparts, I think Malaysia did very well in terms of coming up with the package very quickly, with the 6-month moratorium and all. It was required. It was definitely required. So, we have provided as required blanket moratorium on an opt-out basis to individuals and the SMEs as directed by Bank Negara, and we worked very closely with them. We were duly supported, and also with Ministry of Finance we worked very closely. So that is there, and then you have heard the Prime Minister has said that there will be 3 months more given to people who have lost their jobs. So which we are all abiding by. So in your question of how the banks would balance this risk and ability to remain there, one risk that we see is a moratorium when it ends, end of September. We call it a cliff effect. So people have not been paying, many people may have reduced salary or lost their jobs. So we will be providing them R&R, rescheduling and restructuring facility, on a bilateral discussion basis, because not everyone will have the similar type of issues. So we have to understand their requirements and accordingly provide that. And you may have noticed that government has come with enhanced coverage by CGC, Credit Guarantee Corporation, and SJPP for 70% coverage to now they are covering 80%, which alleviates the bank's risk to a great extent, because that is taken over by SJPP and CGC for the SME. And there has been a special relief fund that was there for bring it 5 billion was given, and probably it is in the road to be enhanced as well. Plus the Dana Jamin guarantee has been instituted. So these are the credit enhancement that are being provided to the financiers to support this period. And if you look at, if I may just add, Malaysia banking sector has been pretty robust. Capital has been, I think all the banks were well capitalized. So we got into this pandemic with a, I would say that good buffer, good capital buffer, very strong position. The banks, we believe, will be able to withstand this period and working hand in hand with the segments and supporting to take the country out of this issue.
I mean, that's true. We've seen the numbers given by all the, at least the listed banks in the country, where they're complying with Basel III requirements, with Tier 1, Tier 2 capital requirements, but we also understand that days past due, the DPD measurement, it's impossible for you guys to do it these days, right? Because you can't do a 30-day DPD, 90-day DPD, 120 DPD, because nobody's supposed to pay.
Yeah.
If I'm supposed to pay and I can't, then you guys can measure. Now that moratorium is coming in. So how do you plan for that credit requirement assessment for your capitalization purposes?
So what we are doing now, you are absolutely right. As you know, there is International Financial Reporting Standards, IFRS 9. We are supposed to book expected credit loss.
Okay.
Say, earlier it was like actual loss, you have a general provision. With the accounting standard change, see, the way it works is that if there is a credit grade migration to or deterioration, then the model, the financial model will generate expected credit loss numbers.
How are you going to do that now?
Yeah, so we have to take the impairments, which we are taking,
Yeah.
and there will be some relief measures that, because this period is totally unprecedented.
Yeah. Yeah.
So this period is being
throwing out the
seen
book,
as
actually. You're trying to
correct.
do something new.
Absolutely. So this period we have to look at it as in isolation.
Yeah.
So that's why Bank Negara and ourselves, we are working closely, and also with the accounting firms. How do we treat this period in isolation? Because it is not BAU. It is not business as usual. It's absolutely out of ordinary.
One of the things that was discussed in the survey was, of course, how long do you foresee, this question was asked to your survey respondents, how long do you foresee it will take for your businesses to recover from the disruptive impact of COVID-19? 62% says 6 to 12 months, about 20% says 1 to 2 years. They are very concerned.
Yeah.
What about you guys? Are you trying to manage this situation?
Well, I think it's anybody's guess. However, if you look at, I mean, we have done multiple surveys, and we have got our economists' perspectives as well. It's going to be a slow recovery. It's going to be a slow recovery if you look at the V curve or the U curve.
No,
those are all.
No.
I mean, is there? So it will be. Our view is that it will be a very slow recovery because people are concerned. So people are concerned about, and there is, unless there is a visibility of vaccine coming in, I think the activity
increasingly by the day is not there.
So people will, it will be a slow recovery from our perspective. So we have to brace for that state of growth. I mean, gone are the days that it will be growing at like those numbers that we have seen before. So how do you stay afloat and navigate within this period of very slow recovery? I think that will be critical. So that's why the business resilience is very important. So that's even we are also have to work on how do we operate in the new world order. What will be the new new way of working? What is the size of property do we need to have our office? How many people will be working from home? If 20% is working from home, do we need that 20% space?
Yeah.
Or if it's agile working, can we reduce our space requirement more? Do we need so many branches? Because we have seen surge of digital adoption. The transaction, the people who never wanted to do digital banking, they're all doing it now.
Well,
because they have been compelled to, right?
Yeah.
Like for us, you can do all your banking without moving an inch through the mobile phone. All this capability is there. But many people wanted to come to the branches and all, but they were forced that they could not come out. And we had massive engagement with people through video capabilities. I mean, probably during pandemic, we had even higher client engagement because our clients were also sitting at home. The relationship manager will call that, sir, can I have a meeting? And they say, okay, let's do it. So we had many video. So that's the new way of working. Can it be embedded in the normal course of working environment?
And of course, the kind of savings that you can get from all these savings, you can actually plonk it into the CAPEX development for technology enhancements, improvement of, I don't know, apps, whatever, right, into the digital capacity of your services to your customers.
Yes, absolutely.
Amazing. Okay, we'll take a short break before we continue our conversation with Standard Chartered. Don't go anywhere. Thanks for staying on with us. We are talking to Standard Chartered Berhad, more importantly about the COVID-19 pandemic, but precisely about the very recent findings of their mid-sized corporate pulse survey. It's a survey that basically takes an understanding of how the mid-sized corporates are actually performing during the COVID-19 pandemic. One of the top findings is that close to 2/3 of SMEs right now believe that their businesses would need about 6 months to 12 months to recover. But again, if I were to repeat myself, we know this. What should corporates do next? That is the question, and that is the purpose of having this conversation today. Joining me is Abrar A Anwar, the MD as well as the CEO of Standard Chartered Berhad. Let's talk a little bit more about the sectors you think needs a little bit more boost in terms of credit, versus other sectors that could fall into that general category. In Singapore, we've seen the sectors that you briefly mentioned just now, travel, hospitality, in fact, schools, if you think about it. These kind of sectors need a little bit more help in terms of credit, but we haven't seen that kind of targeted approach towards giving more credit by this government in these sectors, perhaps not yet. What's your view on this? Do you believe that some sectors need a little bit more help in terms of credit as opposed to others? Or everybody should be treated the same way you guys view credit for all these corporates?
I think it's a great question, and it depends on the economy. Say, if you look at Malaysia, Malaysia is an open economy, and if you look at the GDP profile, a large portion is export. You've got E&A exports. I think if you look at Malaysia, is one of the largest trading nations in the world. Almost $450 billion of trade, 250 billion. I'm talking about earlier data. Of course, there will be some volatility.
Oh, this year is not going to be the same.
Because there will be volatility because of the global demand contraction and of supply chain disruption. So even then, it's 23rd largest trading nation in the world, and trade plays a major role. And if you look at that, 30 to 34% is E&A exports. The semiconductors and the various chips and all that goes to China and all these places. So that's one sector. Then there's service sector. Service sector, within that you have got tourism, hospitality, restaurants, and then all these business services, data centers, and so on and so forth. Then other sectors like manufacturing, like palm oil, or even you take rubber, gloves and pharmaceutical. So all the sectors, some will have different sort of requirements. So first and foremost, the most impacted sectors are tourism and tourism related, aviation, hotels. So that will need different, because their recovery will depend on when the borders open, when the people starts coming in, when people starts feeling more comfortable. So that will be one, and then will be a lot of companies that are domestically dependent in terms of domestic demand driven. So they will also be having a separate sort of requirement. So on a broad perspective, if you look at the first incentive that came out for the SMEs, because 92% of the enterprises of Malaysia are SMEs.
And more S than E.
And then so they need that capital support. Because if 1 month's activities go down, they operate on a very thin
cash basis,
on a
cash
very
constraint.
Correct. They don't have that cushion. So I think that for immediate cushioning, that moratorium and some support was provided. But recovery, if you look at, already if you go to the malls, you will see that activity levels have gone up. But it is not to the level pre-COVID, because borders are closed. So we think that, which we are in discussion with the government as well, they are coming up with targeted support. So after this 6-month moratorium, in fact, that's what we are going to do. Under the R&R, we will be devising different sort of facilities for different sectors. It will not be it will not be same for everyone.
Just like how we saw the moratorium extension for targeted sectors for retail customers.
Yes, that will happen across all the segments. It has to. It has to, because different segments will have different situation, different pattern or different risk
Where
profile.
would you say this conversation is at right now? Is it going to be announced soon, or?
No, I mean, if you look at, we know what to do. We have had a lot of discussion with Bank Negara, and also Minister of Finance. Our Finance Minister is very proactive. He has been engaging with us on a regular basis. So, our plan is very simple. We have already started engaging with our customers, telling them you need help, let us talk. And then we are analyzing their cash flow and their business outlook, and accordingly we are very open to work with them to come out together. That's the plan. So, some sectors needs excess support for enhanced business, they are getting higher limits. Some sectors need support to pay a bit later when it is recovery. If the recovery is elongated, we have to have our facility also elongated, matching with the projected cash flow. It's very simple logic. That's what we are trying to do.
It is, but again, it's unprecedented. So you're starting from a very new base, I suppose.
New base, and we don't know when it will recover, but we have the little bit of optimism as we see the indicators are improving, domestic consumptions.
What about retail customers? What about individuals like people like me, for instance? I have a StanChart credit card. How would you treat people like me and viewers out there watching this show?
Yeah, I mean, you will have to tell us if you need help.
Yes,
if you
I need help.
You just give us a call, we will help you. I mean, it's like that. In fact, we have got all this communication out there. If somebody wants, because credit card was not part of the automatic moratorium, credit card utilization.
But it's unsecured loan. So
so if anybody needed support, we are very much open to support them. That's what's happening in most say mortgage or in personal loans or SME loans, it's happening. So, there is very clear cut communication, and our client engagement plan across the banking sector. It's not only at Standard Chartered, it's being followed by all the banks.
Okay, generally speaking, what would be some of your closing thoughts for this conversation before we end this interview?
My closing thoughts would be that people should feel that the brighter days would be ahead, preparing in a way that we can navigate if there are any such events coming in future. It's a great learning for not only our customers, but even for us as well. And we are also looking at how we become more resilient going forward. Which are the sectors we should be focusing on to keep our portfolio also resilient under a lot of volatilities. So, banks and all the companies, even I am sure Astro will also look at how to operate.
We have given an extended moratorium in a way of our bills for our customers.
Yeah, so you had to, right? So, the final thoughts is that we will overcome this. I think at least Malaysia has seen multiple crises, and Malaysia has overcome it with flying colors. So, this is also a period that we are all going through, and we will overcome. And one good thing that has happened, I think the COVID has been well contained, I think well managed in the country. So, which is giving a lot of confidence to the even outside community to engage with Malaysia. Even today it came out that UK, any visitor from Malaysia, UK will accept without quarantine.
Yeah.
So, which is a big step, and which will help the students or travelers going to UK. So, in a nutshell, we feel confident that we have got more resilience power, I think now. Having gone through these 4 months of really difficult period globally, I think our ability to withstand challenges has enhanced to a great extent.
Fantastic. It's a great way to end actually this conversation. That was my conversation with Abrar A Anwar, the MD and CEO of Standard Chartered Berhad. If you've missed any part of this interview, just head on to AstroAwani.com, look for Notepad over there. Plenty of interviews like this can be found over there. You can also watch these kind of interviews on your mobile devices. Just download the Astro AWANI app wherever you get the application. Until then, thanks very much for watching and goodbye.